Thank you for joining us here on a Monday as we get the markets off and running. The daytime session is now underway in the grain trade. In fact, let's take a look at where we now stand on the corn and soybeans and wheat. We'll get you updated right off the bat here. Let's take a look at the corn board first. On the corn futures, a lot of weakness, as I mentioned, overnight in that Globex market. Changing weather forecasts apparently have the market in a tizzy this morning. July corn down 7 at 3.80 3/4. We have December down 7 1/4 at 3.98 3/4, well under $4 now. Looking at the soybean trade in the early going, we have July down 6.5 at 9.35. That's 2 ticks from its low of the session now. And looking at November, we are down 7 3/4 at 9.40 Surprising weakness in the wheat as well. We have Chicago July wheat down 9 1/4 at 436.5, and in the Kansas City market, you have July currently down 9 at 442.5. Even though rain would not necessarily be that much in the way of being beneficial for wheat with harvest underway. If you look at Minneapolis wheat, you have July currently down 12 3/4 at 593 3/4. Ouch. If you look at the cotton market, you have July currently trading 32 lower at 75.37. Your new crop December is unchanged. Let's go visit with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And Dewey, I'm anxious to get your thoughts on what we're seeing taking place here in the grain trade this morning.
Well, there are 3 things that stand out. One, corn is lower here this morning, and that is because we are expecting to get some rain in the forecast late this week and early next. That's the thing on corn. On wheat, we had Egypt purchased wheat from Romania and Russia, bypassed the U.S., so that's why wheat is down. Bean market, I think, is just more or less following what the other markets are doing here. But one thing that caught me by surprise on the beans, and that is the Commitment of Traders report, showed that the funds actually increased their shorts in beans by 50 million bushels last week. They're now short 620. This is short of the record of 675. But the thing that really caught my position, and that is this is the largest position for a short that I've seen the funds have for the month of June, period.
Yeah, the timing is a little unique here, heading into the depths of the growing season here. That's absolutely right. Now, we did have an overnight sale announced of soybeans to unknown destinations. It was 130,000 tons this time around. That didn't seem to have any market impact at all here on the soybeans this morning.
No, it really hasn't. I think the way their exports are now, of course, the shipments are down about the pace 86% from their peak in November. Anything we get right now is pretty much a blessing that we've got on bean sales.
On the wheat side, now we were showing all the pressure in the wheat. Now the harvest is underway, and a lot of analysts have been telling me that most of the weakness in the wheat is more harvest related from harvest pressure. But I did see reports this morning. For one thing, there was one report out of Oklahoma. They said the wheat streak mosaic was causing the lowest test weight that they've had in many, many years. I did see another post where the wheat harvest is already all the way up into Ottawa County, Kansas, which would be, in the north central part of the state, or the northern part of the central part.
I have not heard of one wheat producer that I have spoken with that have not said that they did not have a drop or fall in the quality of their wheat. That's one thing about this wheat crop we're going to see. It's not going to come in quality-wise a very good crop.
Makes you wonder just how much downside potential really does exist in that crop. And a quick look once again at that cotton market, and then Dewey will talk a little livestock trade. Down 32 in July cotton, and December is still unchanged at 72.49. We're talking with Dewey Strickler of AgWatch Market Advisors. Don't go anywhere. We'll analyze the open in our livestock trade when we come back. And we're back talking with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. We're going to talk about our livestock trade right now, and let's see how they're opening up. Let's go to the live cattle board right off the bat and check on the prices. Right now, a weaker tone, led by the nearby June, which is down 95. It's at 130.30. We now have that August contract. That's usually your most active contract these days at 123.35 per hundredweight. That would be down half a dollar. Check that, now down 48 cents. It just changed. So we had a high early on at 124.22, and we're off of that now by about 80 or 85 cents. October down 56. Now on the feeder cattle side, we currently have the August contract down 40 at 153.78. That's after posting an immediate high of 155.15 right after the open. But we're well off of that now by about $1.40 or so. We have the September down 40 at 153.22. October down 45. So we're talking with Dewey Strickler of AgWatch Market Advisors, as I mentioned. And Dewey, I see where the estimated carcass weights on the cattle out in the plains actually did come up just a little bit here last week. But seasonally, I think that's kind of expected, isn't it?
Yeah, it is. We got a couple of things working on here in the cattle. One, last week we did go up, and we did barely squeak out a new high here at 127.65. That was just a fraction above the high that we made back in May, but we tend to get a little bit of a seasonal move lower here in the cash and also in the beef here, especially after Father's Day. You have a little seasonal break going into the June, July period. And also, too, your spec traders have a near record long position on. So this should be a little bit of a concern to those who are still friendly to cattle.
Now, why is it we had feeders closing one way and live cattle closing the other as we went home on Friday?
Because they can and they will.
But the feeder cattle, of course, they would be more closely tied, you would think, to the corn market. And with the corn under pressure today, do you think that would maybe offer a little bit of support to the feeders here early this week?
It could. You got to keep in mind that there's not a lot of volume goes on in the feeder cattle market. So, I mean, it's going to be subject to some swings and issues that you normally wouldn't see in the fat cattle market.
Technically, where do you think we are chart-wise now on the live cattle, let's say, for the time being?
Well, on the live cattle, I can't rule out the market going up and making some new highs here, but I think that if we start coming down below the low we made last week of 122.80, we may have already seen our top in cattle.
Okay, on the lean hog side, let's jump over there and see where the futures now stand. And right now, you have your July contract down 38 at 82.32. So we're getting a little further away from the high that we had posted on June 1st, which was 83.32, I believe, or 83.52, I guess it was. So we're a little further away from that right now, but we got within one tick of it Friday. Do you consider that a failure, or do you think they'll make another run at it here this week?
I think they'll probably make another run at it. You got to take into consideration the cutout was higher last week. It's the highest we've seen since December 2014. Also, we've got expectations for exports to remain firm here, and I'm not really getting too concerned about the hogs, let's say, on the July contract. Unless they come down and fall below this 80.25 mark, that's some pretty crucial support for the hogs.
All right, well, good stuff. Thank you, Dewey. Appreciate it. Dewey Strickler is with AgWatch Market Advisors. You can look him up in Franklin, Kentucky, and that's how we're getting off and running here in the early going this week, Jen.
All right. Thank you once again, Marlon. Appreciate it.